Good morning, and thank you for being here for our monthly update on the Hedge Invest Newman Credit Fund. The month of November was a very good month, one of the best we had since the inception, of almost double digits on the month in terms of positive performance. The vast majority of the performance came from our tactical long position on the COVID reopening trades. As you know, since the COVID came up during March, we decided to start reducing our short exposure then, and under the expectation that the vaccines would have come and the medical protocol and many other solutions like we've seen. Obviously, we've been super positive and very bullish on the vaccines within the amount of billions spent on that, and new medical protocol will literally remove COVID, although obviously we are very aware of very long-lasting secular trends have been accelerated, like technological winter, which would be very negative, inequality and fiscal over-leverage of state, which unfortunately will have to be dealt with in the next few years. But for now, we think vaccines will come, and probably more likely we get into a bit of a overexciting mode, sort of roaring 20s again, into the reopening over the next few months, if not quarters. The other thing that obviously worked very well was our special situations. Our long-term views, we're very positive on 5G and anything related around that, whether it's the ASM convertible or the OI Brazil or the Dish convertibles. That's something we've been very exposed and has worked very, very well. We took off some chips off the table there, but we're still very exposed. The other thing obviously was alternative energy. We've been building a portfolio of small stocks in very small position, but those act really like levered call options. So we got fuel cell and plug right this year, and those work pretty well. Away from that, very diversified portfolio. We've been taking a lot of risk off because we think there could be a bit of a wobble now in the market. The biggest problem the market is facing right now from a financial point of view is the removal of the COVID emergency, and with that, the super stimulus from central banks. That will be a disaster for the market. Worse than that is probably a raise in inflation expectation, which may come not from labor, like economics theory would predict, but it would come probably from taxation, regulation, lack of trade, fluidity around the world. Overall, we took off most of the tactical position on the reopening COVID trades. Like I said, we remain very focused on our long-term views, like 5G and alternative energy. And we had a bunch of special situations that we still involve. Our biggest shorts remain Atlantia on the corporate side, where we think there could be a potential, decrease of 40-50% on the equity and repricing of credit. And on the other side, obviously, remain very bearish on emerging markets, as top of the list, Turkey. Thank you.